Welcome to the look ahead of video for Monday the 27th of May. Now, as we look what's coming up, it's quite a quiet week, but the main event is coming end of the week with the Fed's preferred measure of inflation, the PCE print. We start off on Monday with some German data. Now, the GDP data out last week was more supportive, showing that the German economy is on a turning point, and the PMI prints were firmer than markets were expecting. So if we see a very strong German IFO print, we could easily see a little bit more upside in the euro, potentially against the pound or against the dollar. So that's one to be looking out for early on Monday morning. It is a UK bank holiday, but nevertheless, that is a print to be looking for. On Tuesday, we go through to US consumer confidence, and that could move the dollar higher if the consumer confidence comes in strong. Now, the last FOMC minutes, the Fed said that the disinflation process is taking longer than they thought, and some Fed members were prepared to hike interest rates if inflation did not come down in the way they were expecting. So we saw a firmer US PMI print last week, and that lifted the dollar and lifted yields. If we just take a look at the dollar index, you can see the dollar index pushing higher into the end of the week. This video is recorded on Friday, so we've still got a little bit of trading to do, but you can see yields pushing higher on that, more hawkish FOMC minutes and the firmer US PMI print. So as a result, if we do see the consumer confidence coming in firmer than markets are expecting, then that should support the dollar higher. So look for euro US dollar downside or dollar index upside. That would be a reasonable expectations from that consumer confidence print. Then on the 9th of May, we have Australian CPI print. Now, when the Reserve Bank of Australia met on the 8th of May meeting, they kept rates unchanged, and they were expected to maybe emphasize the higher inflation that they've been experiencing more than they actually did. So yes, the Reserve Bank of Australia revised its inflation forecast higher, and they extended their rates forecasts of 4.35% through to the middle of 2025. So that's 9 months longer than they previously stated. So if we see, a surprise print to the upside for the CPI print, the expectations will be updated nearer the time. Then you expect the Aussie to gain, particularly against the New Zealand dollar. If it surprises to the downside and you really see a big miss in the data, then Aussie New Zealand dollar downside would be a go-to reaction. There's kind of two-way opportunities here with the Australian CPI print. The RBA have sort of said, they're not ruling anything in or out. So essentially what we're looking for here is some clear kind of indication as to what's going on in Australia and how the inflation battle is going. Then we've got some German CPI data. Now this will form part of the Eurozone inflation data that we have later on in the week. So look at German data to potentially move the euro. If we see the German inflation print coming in, and it starts off with these different regions, if we see a big surprise, either to the upside or the downside, would potentially move the euro, but the best opportunity would be higher inflation, because that means markets are expecting a June rate cut from the ECB. If you see here, June is almost priced in, 87% chance of an interest rate cut on the 6th of June. But what's a little less certain is what happens after June. So what we need to look for here is if we see the inflation date coming in above markets' maximum expectations, then that means the ECB is less likely to need to cut rates beyond June. And that's the open question. So the best opportunity here would come from euro upside if we saw a high print on the German data, and that flows into the French, not the French, but it flows into the Eurozone data, and the French CPI data is coming in later in the week as well. Then as we go through onto Thursday, got a bit of Eurozone consumer confidence, unemployment rate, second GDP estimate, not a whole lot to move markets here. Japanese CPI, unless that comes in very strong, that's unlikely to bother the yen at all. And the main event is going to be the PCE print that comes at the end of the week. Got some German retail sales data, but the French CPI. But again, that French CPI is added to the German CPI, and then you have the Eurozone inflation data. By this time, we should already know what's going on with the inflation data. So the moves are likely to come before the event. So if that was in isolation, that would be a very interesting event. But given the fact that we've got the German, the French data, Spanish data, and then we have the Eurozone data, it's unlikely to be much of a reaction because we should know whether it's going to be coming in higher or lower by that time. The PCE print, of course, is a different matter. And if we see this surprising to the upside, then look for there could be some pretty substantial dollar buying. Could also weaken equity markets significantly. So you'd look for pound dollar selling, euro dollar selling, look for S&P 500 selling, NASDAQ selling. Obviously, and if it comes in well below market's minimum expectations, you expect the opposite. You expect nice upside in things like Aussie US dollar, New Zealand US dollar, nice upside in S&P 500. Canadian GDP also comes in. Now, the Bank of Canada, the last inflation print out last week was, reasonably within expectations. Some elements were a little lower, some elements were a little bit higher. Got retail sales still to come at the time of making this video. So if this is a big miss to the downside, that should accelerate expectations for a rate cut for the Bank of Canada. Their current pricing is expected to cut 63%. So a big miss in the GDP, then expectations of a cut will start to get priced in for that 5th of June meeting. Okay, folks, it's a quieter week this week, but the PCE print should make it all worthwhile at the end of the week. Hope you have a good week.